Hello everybody, welcome to Zeppe Invest. I hope you have a magnificent day. Leave a like, hit that subscribe button and let's begin. The topic of today is dividend investing for beginners. First things first, let's start with the company. A company's main goal is to make profit. It doesn't matter what the company does, selling a product or providing a service, the end goal of every company is to making profits, right? So, let's say a company makes profits. What can it do with the money? It can reinvest for potential growth. It can keep cash on the side. For instance, Apple has over $210 billion in cash. That's a huge amount of money. It can buy back some shares to increase value into the stock. A lot of companies are doing this lately. It's like a huge trend, but I don't mind it. And the fourth thing, and that's why everybody is here for, they can use the profits to pay out dividends. All of these options are beneficial for every investor. But the last one, we're gonna take a deeper look at. So, what company pays a dividend? Mostly a company that is already existing a few years. A company that just started will need profit to grow in the future. So look for well-established companies. To give you a few sectors that are known for dividends: oil, gas, healthcare, banks, utilities, or consumer companies. Dividend is something every company can withdraw. They don't have to pay it, so don't fall in a yield trap. Now you can ask yourself, what is a yield trap? A yield trap is a stock that pays a huge amount of percentage in yields, but cannot really afford to pay it on the long-term base. It's better to invest in a low-yield company that increases the dividend year over year than one big yield company that cannot sustain it in the long term. Dividend investing is one of the most passive incomes you will ever get. This strategy is not for a guy that watches the Wall Street bet things on Reddit and thinks he's gonna make millions of dollars in 1 week. That's not the case. To give you a real life example, let's say you buy a cow. You can feed it so it gets bigger, and you can sell the meat and earn a quick buck. Or you can milk the cow. Over time, you will keep on milking the cow and have more profit than actually selling the meat because you used it over the long time. You earned passive income. Here are some basic things that every investor should know about or understand. The yield, a percentage per year you get in passive income because you invest into the company. The payout ratio. How much profits are given to us? To give you an example, if the payout ratio is 50%, we know that the company, from all the profits they make, give 50% to us. Here are some dates. Ex-dividend date. Let's say you buy a stock before that date. You are in a dividend cycle for that moment, so you're gonna get paid. Let's say you buy the dividend stock for on that date, and the day after it, you are not in the last dividend cycle, so you will not get paid on the next pay date. Dividend growth. This means every year that the company has increased the dividend. So let's say I would have 5 minutes to analyze a dividend company. First things first, I would immediately take a look to the dividend growth. I would prefer to see at least a 10 to 15 year of dividend growth in the past. If you see a company has good dividend history growth, that's a first star. The 10-year growth of the dividend, I would like to see over 6%. That is very attractive for me personally. The payout ratio is different for each sector, of course, but on average I would not like to see if it's above 70%. How do you find all these informations or data? Seekingalpha.com or just dividend.com. Let's compare some well-known companies on the quickly eyesight. We have PepsiCo with a yield of 2.8% and a payout ratio of 69%, and they have grown their dividend for 47 years. J&J 2.61% yield, payout ratio 43%, so pretty low, and the dividend growth is 57 years, amazing. Waste Management yield 1.74%, payout ratio also under 50%, 47%, and they have grown their dividend for 16 years. Southern Company, a yield of 3.84%, a payout ratio of 79%, and a dividend growth of 18 years. Apple has a yield of 1%, so pretty low, but we can see the payout ratio is only 23%. They have increased their dividends for only 7 years, so potential growth in my opinion. Ultra have a big dividend of 6.62%, a payout ratio of 79%, and they are a dividend king with a 50-year of dividend growth. So 3 of these stocks are a dividend king. A dividend king company is a company that has grown their dividend for more than 50 years. So why do I like dividends so much? Personally, I truly believe if you keep on investing in premium quality companies consistently, you could eventually live off your dividends. Did you ever heard of the rule of 25? First things first, track your expenses. My guess, in the future, I need 1,200 euros to survive every month. On an annually basis, that's 14,400. That times 25 is 360,000. That amount I need invested in dividend stocks with an average of 4% yield. Why? 4% on 360,000 is 14,400 euros. Divide that by 12, we are back again at 1,200 euros. Now you could think I know, that's a lot of money. So let's put things in perspective if you would only have invested $5,000. Let's say if you invest that in a 4% yield portfolio, you would have $200 on an annually base. That sounds not a lot, but remember that's only your dividend of your investment. Divide $200 by 12, you would have $16. You could have a phone subscription for free for the rest of your life with $5,000 passive income. I want to thank everyone that is watching until now. I hope you have a marvelous day. If possible, please hit that like button. It really helps me out because I try to bring value in every video and I try to increase the content of every video. I hope it makes sense. If you have any advice, please comment down below, and I'm out. Bye bye. Peace.